And as some of the previous speakers said, we're traded on the Toronto Venture Stock Exchange, and this is our standard disclaimer saying I will be making forward-looking statements. A lot of this has already been covered, so I'll whiz through it because the uranium story and the lithium story kind of merge with global energy demand increases. According to the International Energy Agency, in the next 20 years, the world's going to need 50% more electricity than today. There's 2 billion people without electricity today, growing to 9 million people by 2050. We need more electricity in the world. A lot of people are turning to renewables, Germany, for example, but they've come to realize that renewables are intermittent. They need battery storage. They need backup power, baseload power. But grid storage equals battery growth. And the growth in e-vehicles, as we've heard, means more battery metals required, but also more electricity required. Air pollution and CO2 are concerns for generating power. More uranium equals less CO2. It's a fact. It's the quickest way to decarbonize your power supply is through nuclear power. And it's growing. We've heard about the lithium market a little bit. For every 1% of electrical vehicle penetration, according to Morgan Stanley, we'll need 70,000 tons of lithium carbonate extra per year. And they're projecting a 14% penetration in the next 5 to 10 years. There's really no alternative for these electric vehicles as far as batteries. Lithium-ion batteries are the way to go, and lithium's a big component of it, but not a cost driver of it. We've heard about uranium a couple of times from Paul, and I just want to underscore that where we sit in the cost curve to fill that growing demand is in the lowest quartile cash costs. We've heard about supply removal. The price started to respond, but it's flattened off. It's about $23 a pound today. And incidentally enough, that's our break even on our uranium-only project. We're located in southeastern Peru in a unique volcanic district that is rich in uranium and lithium. We've just made this new discovery, which I'll tell you about in a bit. We have excellent infrastructure, all the ingredients you need, from a supportive government, good labor, a paved road within 3 kilometers of our project, and some other mining operations that are coming to an end, so a workforce will be available. We have a huge land package, and we've really only scratched the surface. And our existing resource base is 124 million pounds of uranium. We've done a PEA with cash costs of $17.28, as I mentioned. But within that uranium deposits, we have lithium, low-grade lithium. But we made this fantastic discovery. We've got essentially surface uranium mineralization that's twice the grade of our average uranium deposits with a $17 cash cost. Beneath that, we have a 100-meter thick, high-grade lithium-rich tuff, a rock that's we'd never seen before, and it averages 3,500 ppm over that lithium metal over that 100-meter interval. We've got strong and rising lithium demand and a stable price. Improving uranium market is another catalyst because demand's going up and nobody can make money at $20. We're starting to understand the lithium a lot better through our extraction work, where we can get 80% of lithium into sulfate solutions, and we're going to be focused going forward on understanding the value it can bring and the precipitation products we could be producing. And we're working with the Peruvian government quite closely on regulations and legislation for uranium and lithium production in the future. Currently, there's none. We own all the uranium resources, and as far as I'm aware, nobody else has lithium that they're speaking about in Peru. These are just a couple of shots of our lithium-rich mineralization. We have a drilled footprint that's 350 meters by 500 meters by 100 meters thick. But we've mapped it out in the valleys on the side. It's longer than 2,000 meters north-south and wider than 1,000 meters east-west, maintaining that 80 to 100 meter thickness and consistent grades. And for those of us who can do math quickly, you take lithium metal, you multiply by 5.2 or so, you get lithium carbonate equivalent. Our densities are at least 2.5 tons per cubic meter. So we're positioning that footprint will be, if not the number one, it'll be in the top 2 or 3 non-brine lithium resources in the world. And we only discovered this in November. So we're continuing to drill as we speak, and we're shooting to get a resource out in April, May timeframe. I mentioned the uranium. Our original PEA for the uranium-only rocks was based on a 289 ppm head grade. We've got over 500 meters sitting right at surface. So less than 1-to-1 stripping ratios. And this will push our cash costs even lower. We've done a lot of work starting at higher temperatures, but we've been able to leach up to 80% of the lithium by just warming up the acid and using relatively coarse grind on this lithium-rich tuff. And we're sending a bulk sample over to ANSTO in Australia, and we'll be working hard on that to precipitate a product, quantify and qualify the quality of the product we can produce, and getting a sense of what the operating and capital costs will be for this lithium-rich rock. It's an incredible discovery. I'm excited, but you can't tell because I'm relatively nervous. This is our potential path to production. We're drilling out Falciani, this new discovery, with an aim at having a resource in Q2, middle of Q2, and a lot of metallurgical test work. Then we're going to move on and understand uranium and lithium co-production. Even though at Falciani they're in different rocks, in our uranium deposits they occur together. We're working hard on the environmental permitting work, and of course advancing the government discussions on future lithium and uranium production in the country. Then we've got our feasibility study work over the next couple of years, and ideally we would like to be in production in 2020, 2021, of course when the world needs uranium, and of course the lithium market will have increased substantially based on all of the countries committing to electric vehicles, based on all the the vehicle companies. Over 80% of the vehicle manufacturers have actually committed to going strongly into EVs. Volvo, for example, in the next 5 years is going to go 100%, they say. We'll see. We've been fortunate enough with this discovery, with some of the bad news coming out of the uranium market, with Cameco shutting production, laying off people in my hometown. That's why it's bad news. It's actually good news for the market. We've been able to triple our share price since November, and we're still terribly undervalued. If you look at uranium peers, we saw the graph from the Goviek's presentation. Our valuation is on uranium alone is 18 to 30 cents a pound in the ground. Our peer average is $1, as we saw. And we're getting no value for the lithium, and we are about to prove up one of the world's largest non-brine resources. Thank you.